All right, all right. Good evening, everybody. LaQuania Shante here, and I decided to go live on my Facebook page. So I've been getting a lot of inquiries on Facebook and Instagram. So I just wanted to put some information out for those that are on the fence. Maybe you've heard about Forex, maybe you've tried it in the past, maybe you were introduced to it through somebody that was in network marketing like I was, and you've just been, kind of trying to decide and make an informed decision if this is something that you can actually be profitable with. And I am here to tell you that you absolutely can, but it's not going to be something that is going to happen overnight. I have been on this journey for almost 5 years, 4.5 years. I started trading around 2016, 2017. And because I was involved in network marketing and because I did get introduced to this through network marketing, I really didn't take it as serious as I should have in the beginning. And I regret that tremendously because now that I have decided to put everything else on the back burner, it has been really a life-changing experience for me. But we can't cry over spilled milk. Of course, I could say I should have, could have, would have did this, but everything happens in divine time. So at the end of last year, I decided that I was no longer going to be promoting network marketing, and I was going to strictly dive into Forex. I am also the owner of a branding and marketing agency. So I did kind of offboard a lot of my clients that weren't really my ideal clients. And I only, decided to work with a select few clients that met a certain criteria. So it freed up my time to allow me to really commit the necessary time that I needed into trading. Because trading, honestly, it is not a business opportunity. It is an investment. You're becoming an investor because once you learn to master the Forex charts, you can really trade anything. Because on the Forex market, you're trading currencies. However, when you learn how to chart and about price action and chart patterns, that's what we're going to be talking about tonight. You can trade stocks, you can trade indices. Indices is actually where they group a certain, like the NASDAQ 100 is the 100 top companies. And that's what I like to trade. And, there's other things that you can trade like S&P 500. That's 500 companies that they've grouped together. You're actually able to trade stocks, but you're trading them on the foreign exchange. So your possibilities are absolutely endless when you learn this skill. It just requires a certain level of commitment. And when this is kind of meshed with network marketing, like you may have seen it done on social media, it's kind of a contradiction because, I'm telling you that you need to slow down and learn. However, on the flip side of that, in network marketing, they're telling you that you need to hurry up and go and introduce this to other people. You need to get people on the Zoom. You need to get people at the meetings. Like it's one is telling you to go fast and one is telling you to go slow. So you're kind of torn between, okay, should I be focused on recruiting the people so that my membership be free, or should I be learning how to trade? Which anybody that is being introduced to this through network marketing, because I can't bash network marketing. I earned my first 6 figures online in that industry. So I am an advocate of network marketing. I don't want people to get it twisted like I'm bashing MLM. I just personally do not feel like Forex and MLM go together unless the person comes in with the mindset of, yeah, I'm joining an MLM that has a Forex product, but I'm going to focus on learning the skill set. And oftentimes that does not happen. People are so caught up in the glitz and the glam and the rented cars and the rented Airbnbs, and they are chasing this false thing, that this facade that is absolutely not going to happen unless they put some time and some effort into actually mastering the skill. And I'm telling you this from experience. Like literally, I have been on this journey and on this hamster wheel for many years. I've lost a lot of money in the market just because I wasn't mentally equipped to trade the right way. It is 90% mental when it comes to mastering the market. So if you are somebody who has a high level of stress in your life, if you're somebody who works a lot and you don't have time to really schedule the time in to really practice your trading as well as study the markets, this is not going to be a good fit for you. Like I literally could tell anybody, oh yeah, you can do this, but that's not what I'm in it for. I'm literally wanting to equip and empower women to master this skill, because once you do that, you'll never have to worry about money for the rest of your life. You will literally be able to print money. You literally will be able to turn your phone into an ATM. But I always like to give that disclaimer and let people know that this is not how it's painted on social media. It's absolutely the opposite of that. And so I always like to be authentic and upfront with people and let them know and set those expectations, because you can absolutely lose a lot of money in the markets. And so you have to know what you're doing. So that is the reason why I decided that I'm going to start doing these Bible studies, because this is a book called the Candlestick Trading Bible. And it is a foundational book that can really help you. You can use it as a study guide. And for those of you that are already enrolled in my program, you can get this for free. You can download the PDF copy of it inside of the private Facebook group. And for those of you that have not taken action and gotten involved, you can probably go online and find this, but it is something that you definitely want to have. And so, shameless plug, I have created a new community. I'm in the beginning phases of it, so my prices are extremely discounted on what they will be in the future. And so if you're somebody who's been on the fence, you've been wanting to learn, and you can't really afford a monthly subscription, my program is a one-time investment, and you won't have to worry about having to try to keep up with the monthly subscriptions. I know when I first started trading, that was something that was very hard for me, because I was paying close to $300 every single month just to get access to the education. And so that's something that I wanted to keep in mind when I started to actually teach the skill set. And so I'm not going to go into the introduction. We're going to hop right in, and I'm going to just give you some foundational background on the candlesticks, because you're probably like, well, what is that? If you're brand new, if you've traded before, then you know what the candlesticks are, and you've probably seen people posting charts all up and down their timelines on social media. So the candlesticks is a way that price action is actually measured. So when you see those little lines on the charts, those indicate a time frame. So depending on which chart that you're on, each one of those candles is a specific time frame. It could be a 1 hour candle, it could be a 4 hour candle, it could be a monthly candle, and those candles tell a story. Those candles actually give you a clear bias on which direction that you should be positioning yourself in the market. And so Forex, you're basically predicting based on past events and past structure in the market. You're predicting if the price is going to go up or if the price is going to go down. And I know that sounds like gambling, but it's absolutely not. You should not have a gambling mentality when you are trading. You absolutely want to make sure that you are going into it with knowledge, and you are getting more than one confirmation. Those are called confluences. You want to have at least 3 confluences that are going to pretty much confirm on your decision. If you say, okay, I'm going to buy because every time price gets to this point in the market, it goes up, then you want to have 2 other things that can confirm why you're making that decision. You don't want to just look at a chart, see a green candle, and put in a buy position, because that could be just the market correcting itself. That could be a short-term move. And if you get in that trade, the market will move against you and you will lose your money. And so hopping right into the Candlestick Bible, I will briefly go over the introduction. So it says the Candlestick Trading Bible is a trading method that is going to finally take your trading to where it should be: consistent, profitable, easy, and requiring very little time and effort. And although I don't I don't agree with that, because it's definitely going to take a lot of time and a lot of effort, especially if this is something that is foreign to you and that you are just now becoming aware of. So the trading system is based on Japanese candlestick patterns in combination with technical analysis. So let's talk about the different types of analysis. There is technical analysis, which basically means you looking at the chart, you make an informed decision based on these candlestick patterns that we're going to be hopping into tonight. So technical analysis is basically price action, and you making a bias based on what the price did in the past, or what moves the market made in the past. Fundamentals is when you are a trader that focuses on the news and the current events in the world. Say, for instance, when the pandemic was happening, there was a lot of news coming out, or if there's an election that's going on, or if there's a non-farm payroll, different things like that because every so often, every month, there's different reports and things that come out. And when those reports are released, the market goes crazy. Like today, the market was very, very volatile. And so I got in, but I got out because it wasn't really predictable. So I'm assuming that there was some news that was released today. And so you want to always keep that in mind. But me personally, I prefer to trade based on technical analysis. And I don't use a lot of indicators on my chart, because the indicators are really, they lag. So by the time an indicator gives you a confirmation or gives you a confluence in the market, that event or that, that movement has more than likely already happened. And so that's why you want to have more than one confirmation, because the indicators can be kind of behind based on the one that you're using. And so let's see here. And if you're in my tribe already, in my group, you have this, so we don't have to dive in to all of this. And I'm doing this for you guys. If you're not in my group, I recommend that you get plugged in while the price is discounted. So let's hop into the candlestick anatomy. So just as humans, candlesticks have different body sizes. And when it comes to trading, it's important to check out the bodies of the candlesticks and understand the psychology behind it. That's what you will learn in this section. So what that basically means is you're going to see short candles, you're going to see long candles. When you see long candles in the market, say, for instance, you see a very long green candle, that means that the buyers are in control. The buyers are really moving the market. And so you always, and you'll hear me say often, the trend is your friend. So you want to trade with the trend. There will be times as you get more advanced and more knowledgeable in the markets where you can counter trend trade and trade against the market. But for a beginner, which is who I typically work with, I don't recommend that. If you know that if you're looking at a monthly chart and you see that the market is in a downtrend, then you really want to be looking for short positions. Or short means sell. So a short means sell, a long means buy. If you are looking at a chart and you see that the trend is down, then you want to be looking only for sell positions. You don't want to be looking, or you don't want to be taking buy positions in a downward market. That really is setting yourself up for failure, and you'll have a more likely chance of having a more profitable trading strategy if you just stick with the trend. And so the size of those candles are going to be a clear indication on the momentum of the market, and they can also tell you when there's about to be a reversal in the market. So when you start to see very short candles with long wicks, then you know that you need to be looking out for a trend reversal or a change in the direction of the market. And so candlestick patterns are basically just that. They're patterns that are formed in the market to indicate support and resistance, which is the floor and the ceiling of a particular time frame in the market. And I'm not going to dive too deep in that tonight. I want to stick with the Candlestick Bible, but in my private group, I'm going to be doing some lives and some on-demand trainings that's going to really dive into support and resistance, and really helping the beginners know how to mark up their charts and how to identify different areas in the market that you should really be paying attention to, which would be support and resistance of knowing where the floor and the ceiling is in your particular trading pair that you're actually trading on. So that's another thing. You want to make sure that when you're first starting out, that you stick with the major pairs. Like I like to trade cryptocurrency, I like to trade indices, but for a beginner, because those markets are very volatile, and most people that start out trading, they start with very small accounts. It is not recommended that you trade cryptocurrency or indices on a very small account, because one move can wipe your account out, especially if you're over leveraging and you're not aware of proper risk management, which most traders in the beginning, they're trying to make money fast. So they don't want to use the smallest lot size and compound their accounts slowly over time. They want to try to turn $100 into $1,000 overnight. And although that is possible and people can look up and do that, I don't recommend people take that kind of risk. So let's see here. The market structure, I just talked about that. There's three ways that the market can move. So it can move in a downtrend, it can move in an uptrend, and then it could be what's called a ranging market. And you may also hear it referred to as consolidation in the market. And that just basically means that there's indecision in the market. So the buyers and sellers are basically playing tug of war and going back and forth, trying to move the market in the direction that they want it to go. And let's talk about who actually moves the market, because if you are listening in for the very first time, you may not even know how the market even moves. So if you have a bank account, you keep your money in your bank account is going to pretty much stay the same. If you have $100 in there, it's going to be $100 in there. But if you've noticed at night, sometimes when you try to log into your online banking account, you can't. It says that it's down for scheduled maintenance. And the reason being that scheduled maintenance is literally the banks are doing what's called hedging. They're hedging all the funds into an account, and they are trading that money on the foreign exchange market. So basically, they're leveraging your money to make them more money. And so back when I first, learned about Forex and realized that it wasn't conducive just to sit money in the bank, because you're going to get a couple of cents. They're going to send you like 1% interest. And a lot of times we like, oh, this is a account, I get interest back, but you could compound and grow your own money. You don't need to have your money sitting in a savings account. It is recommended that you have a brokerage account, an investment account, so that you can grow your money by 1 to 3% daily instead of waiting for them to give you that 1% every quarter or every year or whenever you get those dividends. So just keep that in mind. Like the banks, they are the ones that move the market. Us as traders, you and I, we are considered to be retail traders. And so we really don't have enough buying power or selling power to move the market tremendously. When the market is moving, that means that the banks are doing their thing and they are moving the market. So you want to keep that in mind, because they're, like I said, the news and different things like that, those events is what causes the banks to make different moves. And so because they have so much buying power, because they are leveraging our funds and hedging those funds together, when they make a move, if they make a sale, then, it's going to tremendously move the market. But us, like I said, as retail traders, we don't have that type of power to actually move the market. And so just keep that in mind. Those are the people that really make a difference in the market. So, people ask, well, can't they manipulate the market? They absolutely can manipulate the market. That's another reason why you need to be very mindful on the pairs that you are trading, and you want to trade the same pair so that you can learn the movement of that particular pair, and you'll know what the support and resistance zones are, and you'll know how to set your stop loss above, where they may do stop hunts and manipulate the market and go in and put in a buy just to knock everybody out and then reverse the market. So, all of those things you learn with time, but it is very important to know where your position is in the market and how you fit into the market. So you'll see here, it talks about in this trading Bible, it does give you information on how to draw up your support and resistance and your trend lines. Time frames, top-down analysis. I train on top-down analysis and how you can look at multiple time frames to know what price action is doing, and actually how to analyze the market to make an informed decision. Because you may look at the monthly chart and it's going down and you're like, okay, it's a downtrend, but you hop over to the 5-minute chart and you're like, oh, it's going up. But you got to understand that's only what price did within the last 5 minutes. That could easily change. And so that's why I recommend people to stick with one time frame. If you're a beginner, stick with the hour time frame, because getting on the smaller time frames is going to really confuse you, because there can be a lot of movement in different directions on those smaller time frames. If you're a scalper, of course, you're going to need to look at the smaller time frame so that you can get the perfect entry when you get in. But if you're somebody that, say, for instance, you work a 9-to-5 job, you want to be able to look at the market, determine what the market is going to do. So you may look at the 4-hour chart, because 2 4-hour candles, that's going to be pretty much your shift at work. So you can say, okay, over the next 8 hours, I'm anticipating that the market is going to go down based on what the chart is telling me. So I'm going to set my trade to, to go through this particular time frame. So while I'm at work working, I can still be creating income in the markets, because I did my analysis, and based on those analyses, I think that between 8 and 5, the market is going to go down. And when you get off at 5 o'clock, you set your stop loss, you set your take profit, So that trade is going to play out and do what it's going to do. And you don't even have to be present if you have those parameters set and you've done your due diligence and you've looked at, the different confluences to make sure that that decision that you made is correct. So you don't have to have a lot of time in the charts, but you do have to take time to actually learn the stuff that we're discussing tonight. So once you learn it, it's like riding a bike, it just is there. It's not something that you have to really think about. It comes naturally, but it does take time for you to get to the point where you can look at the market. You've trained your eye to know what to look for, so it immediately jumps out at you. That's what takes the time. So trading strategies and tactics. There's different strategies. You want to find a strategy that works for you and you want to stick with it. If you come across a strategy, which in my program, once I, get my people conditioned, like I said, my group is very new, but once I get my people conditioned to become consistently profitable and understanding the lingo of Forex and all of that, then we'll dive into different strategies and stuff like that to help them, expand on their knowledge and really be able to look at a chart and make their own decision. Because a lot of times with the network marketing industry, people get caught up on getting signals. And I got to a point where I was like, you know what? I want to be the one that can look at the chart and call the signal. I don't want to always have to depend on somebody else's signals, because if I'm doing that, then I can't make a move until they make a move. And if they make a wrong decision, or the market moves in a different direction than what they anticipated, then I can't be pissed off because I should have made my own decision. I should have looked at the market and double checked and went with what I thought was correct. And so one thing about trading is you cannot have low self-esteem. You cannot have low confidence. You have to be confident enough to look at the chart, make a decision, and stick with that. Because the second that you start second guessing yourself or saying, well, it might go up or it might go down, that's when all hell gonna break loose and you're gonna lose a lot of money. So like I said, there's several different strategies: the pin bar strategy, the engulfing bar strategy, the inside bar strategy, the inside bar false breakout strategy, and trade examples. And so money management, that's pretty self-explanatory. You definitely don't want to trade anything that you can't afford to lose, because anytime you enter into the market, there's a possibility that you may lose money. I'm not one of those people that's going to paint this picture like Forex is all roses, because it's not, but it is absolutely the most recession-proof thing that I've ever been involved in. And because I'm an introvert, I prefer to do things that doesn't require me to do a lot of interaction with people. With Forex, I can trade, I can be by myself, I can be on my phone, I can be, remote at a hotel, I can be anywhere. I can be at the restaurant, out to eat with my husband and still checking the charts. I just like the flexibility and time freedom that Forex allows me to have. And I've never had that with any other business. Even when I was in network marketing, it was always a demand of, my team needs me, or I need to do a presentation, or I need to do, different things to make sure that my residual income was sustained. And so that was something that I really just got burned out on. And I did that for many years. And that is the reason why this year I also decided that, it's all about peace and profits for me. I want to do what brings me peace and what brings me profit. And neither one of those is a negotiable for me. And so let's hop into the candlesticks and how this even came about. So the Japanese candlesticks came about. They first was using rice. So the guy who created this strategy, he was a rice trader. He was born in the 1700s, and he understood the importance of supply and demand. And so he basically created a strategy where people could when they were bartering goods and services, this was a system that he created to track, the price and the buying and the exchange of those goods and services. So that's why it got the name of the candlesticks. So let's move on. Let's see. So let's talk about why the candlesticks are important in our trading and our analysis and what we're doing. So it says candlesticks are important to you, your trading analysis, because it's considered as a visual representation of what's going on in the market. So of course, we're not using rice anymore. We're using these candlesticks on the chart. But back in the day, they did what was called paper trading. So people could not trade unless they called in on the phone. They had to call in on Wall Street, put their trades in. They had to have a stockbroker, and these were the people that were facilitating the trades. Because of the way that technology has evolved, and we have the internet, we are now able to trade over the counter, and that just basically means virtually there is no brick and mortar business that centralizes Forex. There's no place where you can go and say, hey, I'm going to the Forex headquarters. It is strictly over the counter. And that's why we have brokers, because the brokers actually facilitate the transactions on our behalf. Before, it required a lot of income and a lot of capital for you to be able to even participate in the markets. That's why a lot of African-American people are just now becoming privy to this information, because we weren't included in the conversations when it came to Wall Street and when it came to investing, because most times we were doing just enough to get by and we didn't have any extra. We didn't have anything to invest in. Debt is a control mechanism. I tell people this all the time, like, we weren't supposed to get this information. They say people perish for the lack of knowledge. We were not supposed to get this information. And that's why I'm so passionate about it, because it is absolutely a game changer. It can absolutely change the trajectory of your life. And it's something that you can pass down to your children, and they can pass down to their children. So it is definitely something that can break the generational curses and create a different type of direction for your legacy. And so looking at the candlestick, it gives you valuable information about the open, the high, the low, and the close of the price. And so the candlesticks tells you all of that. It tells you where price opened, it told you where price closed, and it also gives you information based on where price actually moved and could not sustain during that particular time frame. And that's the wicks that you see on the candle. When you see those long lines on top of a candle or below a candle, that just basically means that the price pushed to that point, but there was not enough momentum in the market in order to push past that point or to sustain that area in the market. So let's see. It says, this is important: the human behavior in relationship to money is always dominated by fear, greed, and hope. Candlestick analysis will help you understand these changing psychological factors by showing us how buyers and sellers interact with each other. And so that's another reason why trading is not 100%. You may look at the charts, you may look at all of your confluences, you may have 3 confirmations, but the market does something totally opposite of what you anticipated or predicted. And the reason why is because there are people on the other side of the trade. And so when you're buying, somebody else is selling. When you're thinking that the price is going to go up, somebody else is thinking that the price is going to go down. And so the market moves based on the majority. If the majority of the people are buying, then the market is going to move up. If the majority of the people are selling, the market is going to go down. And when I say people, we're talking about the big market movers, the banks, the people that actually have the influx of capital to actually make the market move. So it's going to be based on what the majority of the people that are participating in the market, what are they doing? And so it says candlesticks provide more valuable information than bar charts. There's several different charts. And if you decide to dive into Forex and really take it serious, of course, you'll know what those type of charts are, but the most common is the candlestick. Let's see here. It says candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day. They can move the market wherever they want. So it just solidifies what I just said. They can take your money easily if you don't understand the game. So like I said, I have donated a lot of money to the market just by simply being misinformed and uninformed and not really knowing what I was doing when I was first starting out. So even if you can trade $100,000 trading account, you can't move the market. You can't control what's going on in the market. So your money is not big enough to actually make the market move in a particular direction. So using candlestick patterns will help you understand what the big boys are doing and will show you when to enter, when to exit, and when to stay away from the market. So that's important to know too. Not trading is a winning trade. There's a lot of people who they just got to be trading. They just got to be in the market. And when you don't have a clear trade, when you don't have a clear analysis and you just getting in the market just to get in, you setting yourself up for failure. So sometimes you have to have enough discipline to just not trade, to just say, you know, like today, the market was ridiculous. And I think my account went like $300 in the negative. And, you know, you got to have a account that can handle that drawdown. But when I seen that one of my trades was down $300, well, not one of my trades, but several of my trades, because I put in more than one position on the NASDAQ, but it went crazy today. And before I could even get my stop loss set, the market shot up. And so I immediately got out. But before I could do that, it was hundreds of dollars gone. But that's why you have to have a big enough account that can sustain that movement in the market if you are trading those type of instruments. And that's why I said I do not recommend that if you have a smaller account that you are trading indices or Bitcoin or Ethereum or anything like that, because just one false move and you out of there. And if that's your bill money, your car note money, it's not coming back. So it is very important that you only trade what you can afford to lose and that you are properly setting your stop losses and ensure that you are participating in the market that you can handle. Don't get into anything that your budget is not prepared for. So we talked about what a candlestick is. Now I'm going to talk about how the candlestick is actually formed and what the different components are of the candlestick. And so Japanese candlesticks are formed, like I said, using the open high, the low, the close of a closing time frame. So let's just pretend that this is a 1 hour time frame. So right here, if this is a bearish candle, the bear means the price is going down. The bullish, when you hear people talk about a bullish market, that means that the market is anticipated to go up. So it's basically like tug of war between the bulls and the bears. If you hear somebody say the bears are in control, that means that the sellers are in control, the seller moving the market down, and vice versa for the bulls. So this would be considered to be a bearish candle, which means that a bullish candle. That means that price opened up here. This is considered to be the body of the candle, and price closed here. But in between this time, and we said that we're pretending that this is a 1 hour candle, in between this time, price moved up as high as this point. This is called a shadow or a wick. I call it a wick, but the price came up to this point, but it could not break past this point, and it could not stay up this high. So it actually came up to this point, but it closed this point. And during this time, not only did it go up to this point, but it also dropped down this low, but it could not push past this point. So like I said, I always think about trading as like tug of war. You're thinking of the bulls and the bears are playing tug of war, and they're trying to move the market on their side of the line. And so this would be considered, say for instance, the 50% mark. And so the bears are trying to pull it down, and the bulls are trying to pull it up. So it's just a constant game of tug of war, and whoever wins moves the market. And so the exact same thing would be for a bearish candle, which means that the market is going down, except for this is where the market opens and this is where the market closes. And so you're going to see these all over the chart, the different sizes of candles. That just lets you know how much momentum is in the market during that particular time frame. And so each candle is it signifies a certain amount of time. So if you're looking at a 1 hour chart, one whole candle means that the market moved this much in that 1 hour. Or if this is a 5-minute candle, this is how much the market moved during that 5-minute time frame. And so it is very important that when you are trading, that you are looking at the time as well. So like right now, it's 8:44. So I wouldn't want to hop in a trade if I'm looking at a 1 hour chart. If it's 8:44, the only reason why I would be hopping in a trade is if I'm trading off of a 15-minute chart, because I know in 1 minute, a new candle is going to be printed. And so I'm going to be trading for the next 15 minutes based on that candle. So it's best to get in the market at the beginning of that new candle based on the time frame that you're on. So that is going to be very important, that you are just not hopping in a trade at 8:53 just because you see a green candle, not realizing that that candle is about to close and a new candle is going to be printed, and that candle could be going in the opposite direction of what you the position that you actually put in. And so here it's explaining basically what I just said. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candles are always displayed as a white candlestick, which that is not true, because you can customize your charts to be whatever color that you want them to be on your trading software. But back in the day when this was created, they typically just use white and black candles. So you will now see that most people use red and green candles. So the red candles are typically the bullish candles, and the green candles are typically, the red candles are the bullish candles, and the green candles are the bullish candles, and the red candles are the bearish candles. So meaning red is going down, green is going up. So it's best to just keep it simple. I see a lot of people, some people use pink and purple. Like, you can customize your charts however you want. But when you're just starting out, just keep it simple, red and green, so you don't get confused and you're not putting in a sell when you meant to put in a buy because you got confused on which candle was supposed to be what color. So here it says the most important is the open price and the close price. If the close is below the open, then we can say that that candlestick is bearish, which indicates that the market is falling in that particular session or time frame. So bearish candles are always displayed in black. Not true. I just told you how that it says, but this is not a rule. So, you know, they're letting you know that typically people back in the day, they use white and black candles. So you can find different colors used to differentiate between bullish and bearish candlesticks. So I guess I'm getting ahead of the game, but this lets you know that this is literally a good tool to use, a workbook, especially if you're brand new. I know this stuff, so I'm flying through it, but they literally give you step by step on how to really master the market. You just gotta be willing to read and just use this as your trading Bible, which is exactly what it is. It's definitely that. So it says you can find different colors used to differentiate between bullish and bearish candles. The filled part of the candlestick is called the real body. The thin poking above or below the bodies are called the shadows, or you may in today's time hear those referred to as wicks. So the top of the upper shadow is the high, the bottom of the lower shadow is the low. So you in the market, you're going to be consistently looking for either higher highs, which is a trending up or a bullish market, or you're looking for lower lows, which is when you're selling. So long is up, short is down. So it is a lot of information to retain, but once you get it, you got it. Long bodies refer to strong buying or selling power. So I talked about that previously. When you see big candles in the market, that means that the momentum is high. So if it's a big green candle, that means that the bulls are in the market. It's a bullish market, and you can anticipate that the market is going to continue to rise. But when those candles start to get smaller, or the candles are very, very small, and then the wicks are very big, that's a clear indication that there's about to be a shift. There's about to be a change in the direction of the market. So it says, if there is a candlestick in which the close is above with a long body, this indicates that buyers are stronger and they are taking control of the market during that period. So on the flip side of that, the opposite is true for the bearish market. So in the case of a bearish candlestick, if the open is above the close and it has a very long body, then that means that sellers are dominating in the market and the selling pressure is going to be very high for that particular time frame. So short and small bodies indicate that there is little buying or selling activity. And so usually when you see a lot of small candles in the market, that is considered to be a ranging market or consolidation. And that is when you want to really stay out of the market, because although there is going to be movement, it's going to be very small, and it's only going to range in between a certain support and resistance zone. There's not going to be a lot of big moves, which is going to be very limited on the amount of profits that you're going to be able to earn during that time frame. So the market is broken up in 4 different sessions. The main sessions, there's 3 main sessions, which is the London session, the New York session, and the Tokyo, or you may hear it refer to the Sydney session, but Tokyo or Asian session, the London, which is the late at night, and then the New York session, which is the most where the most movement is, because during that time the stock market is open. And so if you're a Forex trader that trades like NAS, or which is NAS 100 or the S&P 500, then you want to trade the Asian session, because that's when the banks are open, and that's when those markets are being moved by the banks. And so candlestick tails or shadows or wicks, we talked about that. So right here is what they were talking about when there's a very short body and the long wick. That just means that there was indecision in the market, which means that there's not a lot of momentum. There's not a lot of buying or selling power in the market. So you really want to kind of stay away until you see some longer candles, which indicates more momentum has been built up in the market. So let's see. Candlestick patterns. Let's hop into that. And this is, if you're in my tribe, this is your homework. I want y'all to go and read over this before we meet for our next class. And more than likely, I will not be streaming it on my Facebook page next time. It'll be in our private group. But I just did want to throw this out there just to give people a glimpse of my trading style, my teaching style, just to see, you know, because I know it's a lot of bull out there. And so I want to let people know that I'm a real trader. I'm not somebody that's trying to get you into a network marketing company. I'm trying to actually equip you with a real skill so that you can master the markets and you can be able to trade individually and not have to depend on me or anybody else. Like, I'm not a person that gives out signals or anything. Like, I'll show you the trades that I've taken after I've taken them, because I want you to learn how to trade. I don't want you to get so dependent on me that you're waiting to see what I'm doing. And then another thing is that I trade indices and crypto and stuff like that. And my students aren't really ready for that. So I don't want to handicap anybody. I want to create traders that can earn 6 and 7 figures in the market. So, and eventually, because that won't happen right away. So the first candlestick pattern that we're going to hop into, probably the only one that we're going to talk about tonight, is the engulfing candlestick pattern. So what an engulfing candle is when you see for instance, you see a green candle, it has already closed. The next candle has already printed and closed. And that next candle is extremely bigger than that previous candle. And so what that basically means is that a larger candle engulfed the whole size of that previous candle. So the green candle may have been very short, and then that red candle may have come along and printed and was like double the size of it. So that would be considered to be an engulfing candle, and that is usually a signal that there's going to be a trend reversal. And so it says the engulfing bar, which is candle, can engulf more than one previous candle. So it doesn't have to just be that one candle, but if it is more than one, then that's definitely a indication that there's going to be a trend reversal. So it says to be considered a engulfing bar, at least one candle must be fully consumed. So you can think of it as like Miss Pac-Man eating that previous candle. If that candle is big enough to consume that full candle, then that's considered to be an engulfed candle. So a bearish engulfing candle is one of the most important candlestick patterns. And so let's hop into it. So it says the first body is actually smaller than the second one, which I just explained. In other words, the second body engulfs the previous one. So you'll see right here, this is considered to be a bearish engulfing candle. So these are the patterns that you would be looking for on your chart in order to know, okay, I've already did my top-down analysis. I already looked at the monthly time frame. I see that the market was trending down. And so then I'm going to hop over to the 1 hour chart. And this is what I'm going to be looking for. I'm going to be looking for a green candle that's real small like this. Then I'm going to be looking for a red candle that's big like this. So now I've got a clear indication that I might need to be getting ready for a sell position. Of course, like I said, there needs to be other confluences that you look at, like a moving average or a RSI indicator. If you're somebody that likes to trade with indicators, I'm a naked trader. So I really prefer to trade on a naked chart. I don't like a whole lot of stuff going on my charts. I really like to just stick with the price analysis, technical analysis. I try to stay away from the news and all of that. I just want to look at what the charts are telling me. Because when you start to add all these different indicators and things to your chart, is just creating more chaos and more room for you to get confused. So if you learn how to trade and become a naked trader first, later, once you've mastered the skill, then you can start to use indicators to really help you scale your account. But I recommend just learning how to trade. Like, if a lot of people use indicators because they don't really know how to trade for real. So it says here that this is how a bearish engulfing bar pattern looks like on your chart. And if you are inside of my community, y'all know, I think it may have been not last week, the week before, we hopped into the charts. I showed you guys some live charts, and we looked at some charts. And actually, one of the trades that I actually called while we were on our session, like maybe 30 minutes after it was over, the trade actually played out exactly as I anticipated that it would have. So so that is the engulfing bearish candle. And of course, the bullish is going to be the opposite of that. And so it says, in case of a bearish engulfing, the pattern tells us that the sellers are in control of the market, and this pattern occurs at the end of an uptrend. So the market has been moving up, moving up, moving up. All of a sudden, you see this big red candle. So right here, this candle right here, this is a doji candle. This indicates that we out of steam, we out of gas, we lost it. So the market was moving up. You had all this momentum. So you should have been getting in somewhere down here. You don't want to wait. This is why I said that the time is important too. You don't want to see this move where the market has moved all the way up here. You wait to right here to hop in because you've seen all these candles going up. You get in right here in the middle of a 1 hour candle or a 4 hour candle, and then you get right here, the momentum is gone. This candle prints right here, you still in the market, you still haven't gotten out, and then you losing all your money because this told you to get out and you didn't, because you didn't know, you didn't know what to look for, and so you stayed in. This engulfing candle was a clear indication that we were about to be headed to the downside. And that's exactly what happened. And this is all trading is you looking for patterns and making an informed decision and knowing what you are looking for. And so this bearish engulfing candle, if you are a person, because there are some traders, they don't take any buy positions. They only look for sales in the market. Me personally, I like to sell the market because I just have this feeling like it's easier for the market to drop. Because you'll see big drops in the market, but you'll see big moves up to the upside as well. But sometimes I just feel like the drops are just way bigger than the moves up. So there are traders, they only take sell positions or short. They only short the market. And those type of traders, all they're looking for is this setup right here. And when you see this, you would see, say for instance, you see two of these. You see, you're looking for M's and W's in the market. So when you see it does this twice, this would become up here, this will become your resistance, and this down here would be considered to be your support. So price would move up and down between this particular area in the market. And when you see like two of these forms, that's considered to be a double top. That's also an indication that there's about to be a change or a trend reversal. So it says, as you can see, when price action pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market and the sellers are trying to push the market to go back down. So basically what I just said, I just need to start reading this because I explained it and then they explained it the exact same way. But repetition is the mother of all learning. So some people, they need to hear it a couple of times. But it just basically reiterated what I said. There was an upward momentum. we got right here, this doji candle said, we're done. And then this engulfing candle said, yep, we in control. We about to take this thing down to the flow, and the market moved down. And so that's all trading is. It's not hard, but it is a lot to learn. It is a lot of information to retain. So it says that you cannot trade any bearish candlestick patterns you find on your chart. You will need other technical tools to confirm entries. So that just basically means you can't just look at the chart alone and see red candles and place a sale. You have to have those additional confirmations or confluences to solidify your decision, so that you know, okay, all lights are green, I need to be going up, or all lights are red, I need to be going down. You don't want to just look at the chart, see it in the uptrend, see red candles, and make a move based on just the candles alone. So that's where the indicators can come in. That's when you can put a moving average on your chart to see if price is below or above the 50 moving average. The RSI will tell you if the market is overbought or if it's oversold. When you're looking at an indicator like the RSI, which means the relative strength indicator, it tells you basically the relative strength of the market. It tells you if the buyers are in control, and when it gets to a certain point, if it's very high, that's going to let you know, okay, it's oversold. So when it reaches a certain point, you need to be looking for buying positions, and vice versa. So getting clear on those indicators and what they actually tell you is important too. So I'm going to talk about the bullish engulfing, which is the exact same as the bearish in reverse. And then we're going to stop there because it has been an hour and I do want to respect you guys' time. And like I said, I just wanted to go live on this page because I've been getting so many questions and so many people inquiring and saying that they're interested. But of course, people are reserved because they don't know what they are getting access to. So I know people don't like to buy things blindly because there are so many, things out there. So now I have something on my page that I can refer people to where they can actually make an informed decision on if they want to get started. But in order for y'all to get that sauce, you're going to have to be on the inside of my private community. So bullish engulfing candle is the same thing. So this is just in reverse. So this would be a buy candle. So this candle would be green and this candle would be red. So this green candle you'll see is very small. This would be a red candle in my case. It is very big. So that means that we are, no, I'm sorry, I'm wrong. This is bullish. So this means that this is a red candle. This is a very small red candle. So this means that the sellers have lost their momentum and the buyers right here, this is where price opened and this is where price closed. So it engulfed the entirety of this small candle, which would be red on the charts. So this is a clear indication that we have been in a downtrend, and now the buyers are coming in the market and they running things and price is about to shoot up. And so basically the same thing, the bullish engulfing pattern tells us that the market is no longer under control of the sellers. The buyers will take control of the market. The bullish engulfing candle forms in the context of an uptrend and it indicates a continuation. So it means that and that's another thing, you have to be clear that sometimes the market will correct itself. So maybe there has been a strong move to the upside and it reaches a point of support and resistance, and maybe the buyers are in control and the sellers are like, nah, we need this price to come back down. And so they get back in control, they push the market down, and then the buyers gain momentum again. That can be considered to be a fake out because you may have seen that uptrend, then you've seen the downtrend and you was like, okay, the market is reversing, it's going back down and you get in a sell position, when in reality, it's not. It's going to continue to the upside. It just had to do some market correction. And so that's important for you to know. And those confirmations is what helps you know whether it is a trend reversal or if it's a continuation and the market is just ranging for a minute so that that momentum can be built back up. So bullish engulfing patterns tells us that the market is no longer in control of the sellers. The buyers will take control of the market. And like I said, this indicates the continuation signal. When the bullish engulfing candle forms at the end of a downtrend, the reversal is much more powerful as it represents a capitalization bottom. So they're going to show you a position of that. So we were in a downtrend. These were red and green candles, but you can see it was going down. We get to this point right here. This candle, this bullish candle engulfs this candle. So this is a red candle. This is a green candle. This red candle is smaller than this green candle. And then we move to the upside. So this says that this shows us clearly how the market changes directions after the formation of a bullish engulfing bar pattern. So the smaller body that represents the selling power, which would have been this candle here, was covered by the second body that represents the buying power, which would have been a green candle. So the color of the bodies is not important. So that's one thing I stressed at the beginning. It doesn't matter what color the candle is. You just have to know personally which is your bullish and which is your bearish candle. So it's important that the smaller one is totally engulfed by the second candle. So which means that the body, this part, we're not talking about the wicks or the shadows. We're talking about this candle. If we were to be able to pick this candle up, we could set it completely inside of this candle. So that's what makes it to be a engulfing candle. Or like this one, this candle engulfs this candle. But these candles right here, these doji candles, or these are sometimes called hammers, these are not considered to be engulfing. When you see patterns like this would have been an indication that the momentum was being lost and that you should start to look for a different reversal in the market. So this is important too. Of course, we'll get into that, but this is something that you want to look for on the charts too, so that once you start looking at this, then you know that this is coming. So once you see this, and then you're like, okay, I'm waiting on my engulfing candle. When you see this, you're like, okay, now it's time for me to get in and take my position to the upside. So trading is not as hard as a lot of people try to make it out to be, but a lot of people just don't take the necessary time in order to really dive into the charts and know the charts. Like I consider myself, if you've been on my website, you see that I consider myself to be a chart connoisseur. Like I spend a lot of time mastering the charts, because once you can master the charts, you can master your money. You can really take things to the next level. But after you master the charts, that is when reality is going to set in. That is where that discipline has to set in. Like I literally am not $1 million trader just because of my discipline, just because of the greed. And I know that because I can actually have a great day in the market, make thousands of dollars in the market, and I will literally sit there and trade and the market goes in reverse, when I could have literally just been like, okay, I'd have made $1,000, let me get out. But I'll sit there and be like, no, I can make $2,000 or I can make $3,000. So you want to, before you get into the market, you want to have a trading plan. You want to know what your goal is. So initially, what I tell my students, the people that I work with one-on-one, when we do these sessions, I ask them, what is your number? What is it that you need to earn that would make this skill worthwhile for you. And most of the time they tell me $3,000. If I could just make $3,000, or if I could just make an extra, $4,000 a month, I would be straight. That would replace my income. And that is what I want to teach you how to do. Of course, I want you to go out and make 6 figures. I want you to go out and make 7 figures. But first, I want to allow you to be able to buy back your time, because acquiring the skill gives you a extreme advantage, because right now you may be working a 9 to 5 and you are trading your time for money, when you could learn how to trade money for money. You can learn how to leverage the money that you have in order to compound that and turn it into something more. So trading is just, it is just a mind-blowing skill set to me. I am obsessed with it. Like I really kick myself that I waited so long to really give this everything that I got. But it happens when it was supposed to. So with that being said, like I want you to think about, and if you're inside of my tribe, I want you to write down and send me an email or share it with me what your job replacing, I call it JPI. Let me know what your JPI is, which is your job. What did I call it? JRI, job replacing income. What is your JRI? What is that number that you actually need every single day? So say for instance, you make $10 an hour. That means that you need to be making at least $80 a day in the markets. Or you can say, you know what, I make $10 an hour. So that's $80 a day if I work 8 hours. So that means that I want to make double my income. So that means I need to make $160 a day in the market. That's a realistic goal that can easily happen within an hour. You can make $160 real quick in Forex in an hour if you have the right account size and you have the right proper risk management and things like that. So I want you to be very realistic when it comes to your goals. I don't want you to come to me and say, oh, I need to make $10,000 by next month, because you're not going to do that unless you are just a phenomenal, trader and you didn't know it. You just get in and you grasp this information and it just comes second nature to you. There are people that have that type of look, but for the most part, 90% of the people that get involved in trading, they lose their money and they get so discouraged that they never pick it back up, and they miss out on something that can absolutely change their life because they weren't disciplined and they didn't take accountability for the greed that they had or the emotions that they had. Because anything that you're dealing with personally, that's going to trickle into your trading. So if you're stressed, if you're dealing with a divorce, or you're dealing with your kids acting crazy, or it's not going to be the right time. You're not going to have the right mental capacity in order for you to make informed decisions when it comes to the market. You're going to be trading out of your emotions. If your bills are behind and you are just totally in chaos in your life, you're not going to be trading based on what the market is telling you. You're going to be trading based on the fact that you need $500 by tomorrow to pay your car note. So I like to discourage people from trading when they have high stress levels in their life. Like, that's why it's important for you to really dig into some personal development. Inside of my group, I have some recommended books that you can listen to, some recommended YouTube channels and things that have helped me. I provide you all type of resources and things like that. Like, my course is not even built yet. So you're going to get live, real, interactive sessions like this until that, program is created and is on demand. But I wanted to do it this way at first because I want to find out what people need. I don't want to just create a course based on what I feel like people need. I want to really have a group, my founding members, the people that get started when my price is extremely low. I want to, get a core group of people that I can teach this skill, and they can go out and be brand ambassadors. Like, yeah, LaQuanya really know what she's talking about. She taught me how to trade. I've made, this amount of money. So I want you to come here just with a realistic mindset. I want you to come in here and really focus on learning these charts and not so much of the glitz and the glam that people like to paint when it comes to Forex. I want you to say, oh, you know what? I just need to double my job income so I can buy back my time. I can walk away from this 9-to-5 job, because most people, they make less than $200 a day on a job, when in reality they can get in the markets, make proper analysis, and make $200 in 2 hours. And then you bought back 6 hours of your time that you can go and be doing what you enjoy doing, what you love to do. So that's the mindset and the mind frame that I want the people that I work with to have. I'm not trying to work with everybody. And I love the fact that, because I've done a lot of things. I've done network marketing for the majority of my journey. And, you know, back in the day, I was building businesses out of desperation, because I had my own needs and I had my own desires. And, you know, I was needing those commissions to pay daycare and do all of the things that I needed to sustain and maintain my own household and lifestyle. But now I'm in a position where I don't care if nobody buy my course. I don't care if nobody enrolls in my program, because guess what? Whether they enroll or not, I have this skill set. And so I can get up every morning at 6 or 7 o'clock in the morning, get on the charts, trade mass, make me a couple of $100, and I'm done for the day. And I didn't have to talk to nobody. I didn't have to convince anybody. I didn't have to sell a product and get asked 100 questions about what's all in it. And, you know, is it FDA approved, and all the stuff that I had to deal with when I was in network marketing, trying to get people to buy products. So, you know, this is my way of giving back, especially now, because the price is so tremendously discounted of what it will be. This will be a $1,500 plus program, because I know that I'm going to pour my all into this. So the fact that I'm allowing people to get started for less than $300, I don't know how long that's going to be. But, you know, I just know that the people that take this seriously, if they really commit to trading for a year, if they really give this all that they have for a year from now, their life will be absolutely changed. So I thank y'all so much for tuning in. Those of you that were on Zoom, or if you were, I'll actually post this in the group as well. But those that are on my Facebook page, or that may watch the replay of this, I thank you for staying to the end. And if you have any questions, feel free to drop them below. You can go to my website, which will be linked somewhere around this video or above. And you can put in your information, get more information about if this will be a good fit for you. The following week, I'll be doing this class again, and we'll be diving into the Doji candlestick. So each week is going to be a continuation of the prior week. So if you are in my program already, and you know, you need to go back and watch this, or you need to print out this PDF, because it is available inside of the group, then I encourage you to do that, because not next Wednesday, but the following Wednesday, we'll be back talking about Doji candlestick patterns. And, you know, each week, you know, you're just going to be adding to your knowledge bank and really retaining this information. And then eventually, probably next month, I'll talk about the Candlestick Bible for a little while, and then we'll hop over into the live charts after, you know, you've gotten a couple of these candlestick patterns down. We'll get on the live chart, and we will start to identify these on the live chart. So y'all have an amazing night. If you are inside of the program already, you can go over into the private group and drop any questions that you have. That's another thing. I am big on energy. That is one of the main things for me. And so if you enroll in my program and you just gonna be quiet, you're not gonna say nothing, you're just gonna be a stalker in a white van, then don't enroll, because I want your feedback. I want to know what you're struggling with. I want to know what areas that I can improve my program on. I need to know what people are not retaining, what's confusing. And if I just got a bunch of people in a group that's not saying anything, that's not liking, that's not commenting, that is not conducive to the community, and it's not conducive to me, because I don't need to do this because I know how to trade. So if you enroll in my program, it is imperative that you participate, that you ask questions. You can't get on my nerves. I am doing this as a way to help other people. So don't feel like you gonna ask too many questions, because the person that asks the most questions is the person that's the most profitable. And those questions that I'm getting will help me when I put together my on-demand program. So I'll know exactly what are the most frequently asked questions, so that when I do the lessons, I can really dive deep in those areas that my students have let me know were confusing for them when they were learning. So like I said, I appreciate you guys tuning in, or if you watch the replay, don't hesitate to ask me any questions that you need answered prior to pulling the trigger and getting in the program. But I hope that this Candlestick Bible study tonight gave you enough information for you to make an informed decision if we be a good fit to work together and help you get the skill set and really become profitable, and replace that job or create that capital that you need in order to start your dream business. Forex is definitely something that you can use to leverage to create an endless amount of income. There's really no cap on what you can do. You're the only person that's going to determine how successful you are at this. So y'all have a great night, and I'll see y'all on the next Bible study.